All right. Good afternoon, Simpler family. I hope y'all had a wonderful holiday and enjoyed your day and a half break away from the charts and the market. I had a great time celebrating with my kids and my grandkids. And yeah, so I am looking forward to talking to you today about some key levels that I am watching in 2025. 2024 has been a great year for us in the trendy room here at Simpler. I trade with Trendy John in the room. We trade supply and demand. And the levels that I'm going to share with you today are levels that we use in our trendy methodology utilizing supply and demand and Fibonacci levels. So let's get started with the main chart that I pay the most attention to, and that is the S&P 500 futures chart. ES chart is a barometer for me for the overall market. And going into 2025, first, I want to point out that since we created demand on the quarterly chart, I am each one of these candles represent one quarter in the market. We created a demand zone in October of 2023, and that demand zone is at 43.49 by 40.62. Once we created that demand zone, we have had one, two, three, four, and five quarters to the upside. Now, I did look back and just see, okay, is this an anomaly or have we done this before? And looking back all the way back 2010, 2015, way back, there have been times that the market has actually had 8, 9 quarters where the price traded to the upside, each quarter closing higher than the quarter before it. So, where I can see that we are extended from the EMA cloud here on this quarterly chart, I also know that the market still has room to the upside, obviously, because back in the past, we have had 8 and 9 quarters that closed higher than their previous quarter. The green zone on my chart, again, is a quarterly demand zone. It would be what I view as the clearance rack from a large, high time frame perspective. The gray box on my chart is what we call in the trendy room the bull channel. It's simply the 236 and the 382 Fibonacci levels of the current move to the upside. When you are looking at a chart that is very bullish, a buy the dip opportunity is relevant in this bull channel. Those levels going into 2025 are 56.82 by 53.81. In this zone right here would be a buy the dip opportunity for me. Below there, the top of this EMA cloud at 51.41 is also an area that I would look as support and for buyers to show up in this area. The gold line on my chart represents two very important things. Number one, it represents the lower yearly edge for 2025. The blue lines on my chart are playing fields of demand and supply from a yearly time frame perspective, meaning this lower edge is a playing field of demand from a yearly time frame perspective. This level at 48.70 is also the golden Fibonacci level and an area that if bulls want to keep the market trend bullish, they will defend this area. So 48.70 is also an area that I will be monitoring in 2025. Now, if you look at the yearly edges for 2024, you can see that going into 2024, this candle right here, price only dipped down to the upper edge, and then it has been 4 straight quarters up. If 2025 repeats that scenario, then we may only get a slight pullback below this upper yearly edge into possibly the bull channel here at 56.82. And that might be the dip and the only uh, significant dip that we get in 2025. So 56.82 by 53.81 are my key levels for a buy the dip opportunity in ES futures here going into 2025. The all-time high of 61.6375 is a level of importance. Can we rally into the rest of the year and make a new all-time high? Or is this the all-time high for 2024? We won't know for 5 more days, so I have not marked a line on my chart at this all-time high, but once the 2025 kicks off on January 1st, I will mark the all-time high on my chart. The levels that you see above for the ES futures are Fibonacci extension levels. I have marked each level, the 236, the 382, the 50, the 618, and the 100. If the market has a similar move to this year, 70.50 by 76.18 would be my target for 2025. All right, now I want to look at the NQ or the NASDAQ futures the same way. Very similar situation. The green zone on my chart represents the quarterly demand zone. The gray zone on my chart represents the bull channel for this recent rally. Ever since October, when we created this demand, NQ has closed higher each quarter for 5 quarters than the quarter previous to it. So 5 quarters to the upside since October of 2023. Very bullish market. A dip buy opportunity would be 20,486 by 19,297. Below here, this is the 50 fib of the current move and an opportunity. I anticipate that if we keep to the upside here, this EMA cloud will catch up and we will have a confluence of EMAs as well as the 50 fib. If price drops down to the golden Fibonacci level here of 17,317, that is an area that I believe that the bulls will protect. Just below there at 17,036 is where the lower yearly edge is for NQ, so a playing field of demand down here at 17,036. Now, just like ES, we are very near all-time high. The all-time high set this year was 224,050 Above there, I have Fibonacci extension targets for targets in 2025. You can see those levels on my chart. And ultimately, if we repeat last year's price action, I would be targeting 262,000, sorry, 26,242 by 28,551. Buy the dip opportunity here, looking for support here as well as here, and the lower yearly edge, of course, would be a clearance sell and the quarterly demand zone below at 14,965 by 12,800 is definitely an area that I would look to really go all in at this level in this demand zone. Just like ES, last year, price briefly dipped below the upper yearly edge for 2024 and then 4 quarters to the upside. If the same holds true for 2025, here is the upper yearly edge level at about 21,757. Now that I've covered the two main futures charts that I pay attention to, I thought it would be good to give you some levels of some of the most popular names and names that I do have equity positions in my long-term trading account. The first is Apple. What a nice bullish move after price consolidated here for 1, 2, and 3 quarters. So almost an entire year of from July of 23 until April of 24. Apple just consolidated in this area of 174.19 by 159. Once price moved up and above this consolidation area, it has been 1, 2, and 3 quarters to the upside. We created quarterly demand down in this area, and this is the clearance rack for me for Apple. The 618 of this move is 198.23, and that lines up with the EMA cloud here on the quarterly chart. But in the meantime, you have the 50 fib at 210, and the bull channel for Apple is 237 by 222. Buy the dip opportunity in this bull channel for me, or waiting for a 618 pullback and then getting all in good to go in Apple at the demand zone below 174 by 159. Just like ES and NQ were at all-time highs, those were actually created today. And so I have some extension targets that I would trim my positions in Apple into 2025. Those areas, and I'm just going to round 282, 297, 308, and the 320 area would be a target into 2025 for me and Apple. Next up, I'm going to go over my levels for Amazon. All right. So for Amazon, this is what we are looking at. This quarter on Amazon is actually creating, in the process of creating, a new quarterly demand zone. Very bullish this quarter, Amazon has been. And I anticipate in the next 5 days, Amazon will close up here rather than down here. So I went ahead and marked this as my quarterly demand zone. 184.90 by 151.61. You can see the 2025 lower yearly edge is down here towards the bottom of this zone. This is the buy the dip opportunity on Amazon. In the event that we just get a pullback to the bull channel, I would look to add to my equity position as I have trimmed my equity on the way up this quarter. I would look to add some back at or around 206 and then save the rest of my allocation for the demand zone here at 184.90 by 151.61. As far as some targets go to the upside for Amazon into 2025, 254, 267, 278, and ultimate target to the upside 288 to 321 in 2025. Next up, I'm going to look at Google. All right. Google, just like Amazon, is in the process of creating a demand zone here on the quarterly chart. That level is 167.69 by 147.22. And it is an area that I would be interested in buying the dip on Google. 174.32 would be the level that I would start adding back into my equity position in Google, saving some powder for this newly created demand zone. But my lower yearly edge is actually down here at a monthly demand zone 138.72 by 127. Therefore, I will save a quarter of my total allocation in the event that Google really pulls back and flushes down below this quarterly demand and wants to come down to the lower yearly edge. But just like ES, NQ, and everything else we've looked at so far, you can see in 2024, you just got a little flush below the 2024 upper yearly edge, and then price took off. As far as some targets to the upside, these are Fibonacci extensions again. 217.71, 228.27, 236.35, and the ultimate target in 2025 is 245 by 271.84. Next up, we're going to take a look at Meta. Meta's super bullish all year. Heck, it's been bullish since the beginning of 2023. Whereas ES and NQ are working on 5 quarters up. If you look here, Meta has closed up each and every quarter for the last 1, 2, 3, 4, 5, 6, 7, 8 quarters. This is the bull channel of the move. 516.49 by 441.21. Here is the 50, which is lining up with our lower yearly edge, and the monthly demand zone down here at the 618 is from about 320 to 274.38. In the event we get a big, huge flush in 2025, I need to know where those lower levels are at because I like to save some room to add into my positions in the event we get that huge flush. Again, 638.40 is the all-time high in Meta. It was created during this quarter, and once the year closes, I will mark this level as a trim. In the event I get a pullback buy, I would be trimming at the upper yearly edge and then again at the all-time high. But some Fibonacci extension targets for Meta 708, 750, 786, and then ultimately in 2025, 823 by 930. We're going to round up, call that 935. That would be my ultimate target to the upside in Meta for 2025. Next up, let's take a look at Microsoft. In case you didn't notice, I'm going over the big tech and popular names to trade, the Mag 7, etc. Just because I know a lot of you like to trade these, as do I. So in 2025, these are the areas I'm watching. First, our quarterly demand zone is down at 316 by 275. This is the clearance rack, folks. Here is the 618 of the current rally at 349. 377.06 is our lower yearly edge. It is also the quarterly cloud here, the EMA cloud. This would be the 9 EMA on the quarterly chart. And the bull channel is here at 422 by 395. If you are maybe not in any Microsoft equity, this is an area that you could potentially start a position in. I am in equity and I have actually already added to my equity position at 400. So I would not be adding again in here. My next add would come in at 377, then 350. I rounded up there. And all the last of my ads would be at 316 to 375. All-time high was created last quarter, not this quarter. Right now, we are creating another inside candle. So this would be 2 quarters inside of this initial candle body. So this, what is right now a bull channel, in the event in 2025, we get that up candle, this would become a new demand zone. But for right now, it is simply consolidating here using this bull channel of 422 by 395 as its support. Above here, you have the upper yearly edge for 2025. That is at about 457. And above there, the all-time high of 468.35. In the event Microsoft doesn't act like Mr. Softy and we get a rally in 2025 for Microsoft, here are some extension targets above. Basically 500, 525, 545, and then ultimately 563 by 626. Those are some upside targets for Microsoft that you could use for 2025. And these are targets that I would be using for 2025. Next up, a crowd favorite, NVIDIA. What a year it has had. Uh, Semiconductors in general, honestly, have had quite the rally as of late. Last quarter, we created an inside candle, and this quarter is trying to close above. I have not marked this as demand because the move is just kind of diddle daddling around here between the all time high and this bull channel. I have not marked this as demand on my charts. This is the level that I am watching to add to equity positions and also leap type positions if you're into that in options. 126 by 109, that is the bull channel. This is the 50 fib here at 96.12, the 618 at 82.72, You have monthly demand at 6604 by 4087. This is the clearance rack for NVIDIA in the event that we get a sharp pullback. This is where I would make sure I am in full allocation in my NVIDIA long-term positions. The lower yearly edge for 2025 is right at $59 on NVIDIA. That all-time high, 152.89, since it was created this quarter, we have not been back up here, and price is actually staying right now below the 2025 upper yearly edge, which is at about 141. We have had struggled to get above there for the last several weeks. And so in this area, if I were to get a pullback into this zone, the 141 by 153 would be an area that I would trim. Above there on a nice rally, 177.23, 192.76, 205, and ultimately for 2025, I'm looking for price to be in the range of 217 by 259. All right. And let's see, what else do we have to talk about? Tesla. This will be the last one that I'm covering with you, but just know I do the same thing over and over again for any stock that I'm interested in trading for 2025. For Tesla, you have quarterly demand at 201.02 by 101.81. This is where Melissa will be loading up more on Tesla positions. Lower yearly edge at about 177. Now, let's talk about the bull channel. The bull channel right now, 406 by 355. This is a buy the dip opportunity. I wouldn't go full allocation here. Rather, I would add at 313 and again at 272, saving some of my allocation for this demand zone. Above here, all-time high 488.54. In the event that ends up being the all-time high going into 2025, it would be an area that I would trim positions if I get a dip buy back here. As far as extension targets go for Tesla, 568, 618, 664, and then ultimately in 2025, I'm looking for 706 by 838. I know it sounds like a lofty target, but please understand that when we were buying the dip in this demand zone in the trendy room and we had targets of 420, it seemed lofty as well. You can see that's 100% move, and this is a little less than 100% move. So I know some of the targets can sound lofty, but keep in mind that you never know what's going to happen. It's good to have a plan ahead of time. All right. So, those are some key levels that I am watching for 2025. If you're a member of the Trendy Trading Room here at Simpler Trading tomorrow afternoon, I plan to go into detail the stocks that I will be trading using equity or options type option expiration into 2026. I'll be going over those names tomorrow afternoon in the Trendy Room. So be sure if you're interested in that type of trading that you join me tomorrow in there. As always, thank you so much for being a part of the Simpler Trading community. We do truly appreciate each and every one of you. And if you're not a part of the Simpler community, go to the website simplertrading.com. We have trials. You can check us out for a very small fee and see what all the hype is about. Y'all have a great rest of your day and rest of your trading week, and I will see you again next week. All right. Much love, fam.